What does this tell us? Number one, it is almost futile to try and time markets. Investors can change their minds and their behaviors virtually on a dime, often acting in fairly irrational ways. This is not a great environment as a long-term investor. The second thing that I would suggest is those people that had declared that the economy had already achieved a soft landing are probably rethinking that, thinking that they may have been a little bit premature in that conclusion. We certainly have to keep a watch on a slowing economy as the year progresses here. I think much like the Bank of Canada concluded back in June, the Federal Reserve has now come to the conclusion that they need to bring some support to the U.S. economy and specifically the U.S. labor market. It's worth noting that looking back through history, a year after the Fed cuts interest rates for the first time, markets are typically higher roughly 85% of the time. Obviously, no guarantee about future returns, but it's nice to have monetary policy on our side for a change. Ultimately, the outcome of the election has very little to do with future investment returns. We've seen raging bull markets and horrible bear markets with both Republicans and Democrats in power. In the end, it really doesn't matter. I think the underlying fundamentals such as interest rates, the health of the economy, liquidity, and the direction of corporate profits are going to be far more important in determining investment outcomes over the next year.